Hey everyone, welcome to this AI Shift News Explainer. We're diving straight into something absolutely massive today, the preliminary May 20, 2026 SpaceX S-1 filing. We are going to unpack their monumental shift from being just a rocket builder into a global infrastructure giant. It's a wildly fascinating evolution, and we're going to look at exactly what the numbers and the narratives in this filing are really telling us.
Before we get too deep in the weeds, let's lay down a quick ground rule. This is strictly an educational, plain English analysis of a preliminary SEC document. It is absolutely not financial advice. Keep in mind, while the ticker SPCX is officially confirmed, a lot of the final details, like the ultimate IPO price, the total valuation, and the exact trading date, are still totally pending. We're here to look at the business, not to hype a stock.
All right, here's our roadmap for today. We're going to move beyond the rocket company perception, look at their core infrastructure pillars, dive into that crazy AI and data layer, map out 3 scenarios for 2030, break down the key risks, and finally pinpoint exactly what you need to watch next.
Okay, Section 1. Beyond a rocket company, shifting the paradigm.
You know, there's this huge gap between what the public thinks SpaceX is and what's actually under the hood. Everyone pictures the sci-fi Mars dreams and space tourism, right? But the S-1 reality? It exposes a sprawling, interconnected beast of a platform. We're talking about a global internet service provider, a master of complex logistics, a builder of AI data centers, and a heavy-duty defense contractor. It goes way, way beyond just launching cool rockets.
And getting here? Yeah, it definitely hasn't been cheap. The filing reveals they've burned through over $37 billion since day one to establish this unprecedented scale. $37 billion. But here's the thing, that's not just a burn rate. It's a colossal financial moat keeping competitors decades behind. That staggering number is literally what it takes to build out the physical and digital backbone required to dominate all these emerging industries at once. Moving right along to Section 2, the core infrastructure pillars. Let's look at launch, connectivity, and scale.
The S-1 lays out this frankly brilliant operational loop. Step 1, they drastically lower the cost to orbit utilizing reusable rockets. Step 2, because it's cheaper, they can increase their flight cadence, flying way more often than anyone else. And Step 3, that crazy high cadence ultimately lets them deploy their own massive infrastructure networks at a fraction of the traditional cost. It's this incredible self-reinforcing engine that drives the whole shebang.
To really grasp the scale we're talking about, just look at this number. As of March 31st, 2026, SpaceX is operating roughly 9,600 Starlink broadband and mobile satellites up there in low Earth orbit. 9,600! And it's paying off. They generated over half the company's revenue last year, around $11 billion. They aren't just chucking metal into the void, they are running the most advanced broadband constellation on Earth, actively serving over 10 million subscribers.
But to keep that momentum going, they literally need a bigger boat. Enter Starship. This is the linchpin. It's a fully reusable, super heavy-lift beast designed to haul 100 metric tons to orbit, and it aims to slash launch costs by 99% compared to historical averages. I mean, 99%. That doesn't just improve the math. It totally shatters traditional physics and finance models. The filing says they're targeting commercial payload delivery in the second half of 2026. If they nail that, it's a whole new ballgame for the economics of space.
All right, Section 3, the AI and data layer. This is the reality of their $20 billion bet.
Now, we really need to cut through the noise on this one. You've probably seen the clickbait headlines suggesting AI is literally piloting these spaceships. Well, actually, scratch that. It's just not true. AI doesn't fly the rockets. What it actually does is act as the invisible intelligence, optimizing these mind-bogglingly complex data flows across their global network.
And the data totally backs this up. Following that early 2026 XAI acquisition, the filing confirms 60% of their 2025 capital spending, that's roughly $20 billion, went straight into AI. And it's funding real, immediate applications today. We're talking over 1,000 automated collision avoidance maneuvers in space every single day. It manages Starlink's network routing, spectrum optimization, and autonomous manufacturing. And get this, they're even laying the groundwork for in-orbit gigawatt-scale AI training clusters. Just let that ambition sink in for a second. This transforms them entirely into a space, connectivity, and AI infrastructure conglomerate.
Which brings us to Section 4, 3 scenarios for 2030. Let's forecast where this infrastructure is heading.
Transitioning from strict SEC facts to some forecasting, think of this like a choose-your-own-adventure for the global economy. In our conservative scenario, Starlink is a steady cash cow. But if Starship struggles with full rapid reuse, that's going to drag on their valuation. Moving up to the base case, Starlink dominates globally, and Starship reliably deploys payloads, drastically raising their launch cadence. But man, the bull case? That's where Starlink becomes the absolute default global communications backbone, and Starship achieves high-cadence rapid reuse, kicking off deep space logistics at massive scale. As you can see, varying degrees of success with Starship literally dictate the company's entire market dominance over the next 4 years.
Okay, Section 5. Key risks for investors. Time for a reality check.
Because as staggering as that upside is, we have to bring this back down to earth. These are the critical vulnerabilities investors absolutely cannot ignore. First off, we're talking about a massive, ongoing cash burn rate. And if that all-important Starship program faces development or reuse delays, that entire 2030 timeline we just discussed gets pushed out. Then you've got giant regulatory hurdles and global spectrum limits to fight through. Oh, and from a governance perspective, Elon Musk currently holds over 85% of the voting power. Post-IPO, he's still keeping over 50% control. For everyday investors, that means traditional independent board oversight is going to be highly limited. You are betting directly on the individual.
We also have to highlight their strategic reliance on the public sector. About 1/5, exactly 20% of SpaceX's 2025 revenue came straight from the U.S. federal government and defense contracts. Now, sure, that gives them a nice solid revenue floor, but it directly exposes the company to shifting political priorities, crazy strict federal regulations, and the constant risk of contract terminations.
Finally, Section 6. What to watch next as we track this IPO.
As we get closer to the launch date, you'll want to keep a really close eye on a few things. Watch for those amended S-1 filings to finally lock in the share price range and the total valuation. And you absolutely need to monitor Starship's upcoming 12th flight test. Honestly, mark that one on your calendar because its success is highly correlated to all of their 2026 deployment goals. Also, look out for further disclosures on just how much capital that XAI division is consuming versus Starlink's margin growth. All these details are going to dictate whether public investors believe the valuation leaves enough room for the immense execution risks ahead.
And this leaves us with the ultimate question for this explainer. Can SpaceX actually pull off this staggering capital burn and transition from a dominant rocket launcher into the defining AI and infrastructure platform of the 2030s? Will the public markets value this simply as an impressive aerospace firm or as the foundational AI-driven infrastructure of our multiplanetary future? It is literally a multi-trillion-dollar question, and we're going to see the answer unfold over the coming months. Thanks for joining me on this deep dive, and remember, keep your eyes on the data.